Hello, traders, and welcome to the Friday wrap-up. September 26, 2015, coming to you live from Pattaya, Thailand. Yes, it is Saturday morning for me, bright and early. Up early to get this video to you as we do the Friday wrap-up, where we're looking at we got close to 20 charts to look at today, and we're looking at price action on the daily charts. Traders, this is brought to you by FXCL Excellence in Trading. Please come visit us at fxclearing.com for your trading solutions. All right. Man, what a beautiful day. Bright blue skies, nice and cool. Wow. Really sweet outside. Can't wait to get out of here. A little early to be going out, but looking forward to heading out to the beaches and probably the gazebo this afternoon. Looks like a great day. All right. So let me introduce myself to you. My name is William Gill. I'm your moderator for the Friday wrap-up and also the market opening preview, which is brought to you every single trading day before the London Open. Traders, I started trading in the year of 2006. In 2008, I retired from a wonderful 27-year career in the fire rescue department out of the great state of Florida. Traders, I 9 days later came to Thailand for a 3-month holiday to celebrate my retirement, and well, it's 8 years later, traders, and I'm still here. Love trading the Asian markets. Well, I should say the Asia time zone, as it's basically like going to work. Up early in the morning and still up late at night trading the New York markets. However, I only do about 3 hours in the New York markets. And no, I don't sit in front of my computers for 14 hours a day. I do have breaks, 3 hours here, 2 hours there, an hour here. So it's pretty good. I'm always looking at fundamentals and I'm looking at technicals. I'm a technical trader. I love looking at charts and price action and candlestick patterns and formations, and always looking for opportunities and probabilities that I can win that trade more on my side than the other side. Love to get a W, but unfortunately we do get losses. But a quite productive week this week. All right, that's a little bit about myself. Let's get this risk disclaimer out of the way. Forex trading has a large potential reward, but also a large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Most importantly, traders, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's head on over to commentary today. Not a lot to talk about. I don't have the indices in front of me, so I know the market's closed down. I think the Dow closed up. If I'm not mistaken, what I read this morning. So it was a mixed closing in the New York Stock Exchange. I thought this was a great trading week, even though we had some people speaking, like Draghi was speaking, and then we had Auntie Yellen, good old Janet Yellen from the FOMC speaking. Really didn't say much. Draghi was more point blank. I give that guy a lot of credit. He just shoots straight from the hip. He doesn't fool around. He'll tell you what's going on. Whereas, unfortunately, in the U.S., with these Fed chairman people, Bernanke was the same way. Greenspan, you couldn't understand a word he said anyhow. They just beat around the bush. The only thing she said that was pretty concrete was that they were going to raise interest rates before the end of the year. So if they don't do it next month, which I don't see why they would, why would 3 weeks make a difference why you didn't do it 3 weeks ago? So we're probably looking at December for an interest rate hike out of the U.S., so that means we got to listen to it every day. It's just getting boring. It's getting old. Well, it's getting old. And it affects our trading. I mean, it does. It affects how the markets react. It affects how we trade and how it goes. So we'll just have to really keep an eye on that. So we're going to take a look at a bunch of slides today. Remember that these are daily charts. So that means every single candlestick on the chart is 1 day. So I want to start off with the dollar Swiss. Now, we're going to be talking about the dollar Swiss quite a bit today because, the Swissy is extremely weak. And the other highlight of our slides today is going to be the CAD. The CAD has really taken, Canada has really taken a beating since these oil prices went down to $40 a barrel, $45 a barrel. They have really, really, really taken a beating. Wait till you see some of these currency pairs. So if you take a look at this dollar Swissy, the dollar strong, the Swiss is weak, and that's why we're up here. But on this daily chart, if I was trading this on a daily chart, I really don't want to get into trade plans, but I mean we're at significant resistance here. We can see it's spiked through this area. It has made it up higher. You can see our resistance line by the EA on the chart. So that's that yellow line. You have a resistance and a support line on all the charts. So if I was trading this, I'd be looking for a couple of red days coming into next week. This is going to correct. I would think that this is going to correct. So we'll see how this works out. But again, the dollar is much stronger than the Swissy. So, and remember the Swissy is correlated with the euro. So what the euro does, the Swissy usually does the opposite of. All right, let's keep moving. Dollar CAD. Yeah, we're going to keep a real good eye on the CAD. They're taking a beating this week up. A lot of traders made some really good pips on these CAD pairs this week. Just absolutely CAD just taking a lashing in the markets, and this week was no different. Look at this. Basically, 4 up days out of 5 days of trading this week. So quite the move here to the upside. And we're going to see that as we go through the charts. The other one we take a look at is the Aussie dollar. The Aussie still is weak, folks. It's, all you want to do is sell the Aussie. We see on some smaller time frames where, you get some up days and that's fine and things like that. But, the bottom line is you got to look at these higher time frame charts in your daily trading. And the bottom line is that this Aussie is taking a beating, and it has been for the last year and a half, and I don't see it getting any better. And realize that the Australian government wants the Aussie to be at 65, 0.65, 66. So this isn't unusual. This is not like it's not expected. The issue is that this is a commodity pair, and this will move when news comes out from other data other than the Aussie data. So U.S. data comes out, yen data comes out, China data comes out. The Aussie is very affected, especially with China data. The Aussie exports and imports with China big time, and it's one of their major money makers is China. So you got to be alert to that. Okay, here's the euro pound. Now you would expect this to be sideways, right? The euro's been weak, and then the euro's been strong, and the pound's been strong and the pound's been weak. So we've got this fight going on here. But if you take a look at this, we've had 4 up days in the euro and pound weakness. So pretty interesting chart. But this is a nasty range here. If you were trading this, the only thing that you have a clue here that we're going to get a red day is take a look at these wicks on our last 2 days. We closed out Friday's session. I do this after the New York close. And if you look at this, look at this doji on Friday. Now, this could be profit taking. This could be position squaring and all that stuff. But actually, the 200 exponential moving average made no difference in this. As if you look left of the chart, the 200 did make a difference in a lot of areas during the past couple of weeks where price reacted off of it and couldn't get through it. Not yesterday, just spiked through it and just kept on going, and the day before. So pretty interesting as we look at the euro pound. Okay, here's our euro Aussie. This is pretty crazy. The euro is weak, the Aussie's weak. I mean, the euro has been on a roller coaster. 1 minute it's at 1,400, the next minute it's at 1175. So it's just all over the place. The Aussie is weak, so it's like putting 2 magnets together. And what you end up having here is you just have price that is not going to go nowhere, and you end up in a range. So, if I was said, well, you have to trade this, how are you going to trade it? I would not trade this pair. This is just not a tradable pair, the Euro Aussie. It's just too inconsistent. So I wouldn't trade it myself. Here's Euro Swiss. Now you would expect this. The euro is definitely stronger than the Swiss, so you would expect some up moves here. However, take a look left of the chart, and we're at price levels where this is total resistance here, and it can't break this. This keeps getting knocked back. And if you take a look at Friday's candle, this made a big move up, but couldn't break that resistance line. That 09 95, 1.10 area. It's not breaking through those levels, and it's just staying here. And it looks like we're sort of wedged between the 200 and resistance here. So pretty interesting. But the euro is definitely stronger than the Swissy, that's for sure. Okay, here's the euro yen. It's a pair I trade regularly, the euro yen, but the euro yen is bearish. You got to look at this chart spatially, and I think a lot of people mislead because we enter on lower time frames. But if you take a look at this chart spatially, this is giving us lower lows and lower highs. Yeah, we had a couple of up days, and you can expect that. It's going to happen. Forex doesn't move in a straight line, and either does the euro yen. And the yen's had a lot of publicity lately, with Abbey taking a lot of heat, and his approval ratings coming out the other day, and they were like at 35%, and he dropped like in 1 month. And Kuroda has been on the microphone a lot last week, saying that they're prepared for anything, and they can, they have a lot of tools to correct if any issues come up. So, I'm expecting some kind of a move on the yen part. However, this pair is bearish. This pair is very bearish. I would only be looking to sell this. Now, we have 3 days to the upside. If you were trading this chart, this is real easy to trade, folks. Just stick a trend line on those last 3 days, those last 3 blue candles. Stick a nice tight trend line there. You can use your angle tool on the MT4 platform and do a 35-degree angle, and you're going to get a trend line out there. And if it breaks the trend line to the downside, just sell it. Like I said, this is a bearish pair. Okay, here's a dollar Swiss, and of course, we would expect this to be in an up move. This week, you look at these 3 big blue candles, right? So the dollar is, of course, much stronger than the Swiss. It's pretty easy, but it's pretty, it's pretty funny. This is like a weird chart because if you look at this, chart in the whole, you would say this chart is bearish. It's because we went through the phase where the dollar became weak, and that was post that FOMC announcement. And but this, if you look at this, if you didn't know what was going on fundamentally, you would say, this is a sell, right? But the Swissy is really, really weak. So this is sort of like misleading and also a pretty good indication on what's going on here. But on a whole, this is a bearish chart. And I'd be looking for another red candle as we move forward into the next week. Nobody's buying the Swiss franc, folks. Here's a pound yen. They call it the beast, and they call it the beast for a reason. Look at that nasty price action left to the chart here. The pound was weak, and you can see we had 3 down days, big down days. Thursday ends up on a doji, and Friday ends up on a doji. Indecision, doesn't really know which way it wants to float. And we have this 200 exponential moving average sticking us right in the face here. So, how are you going to trade this come next week? Good question. Good question. If you look at this chart again, look at it spatially, look at the whole chart in a whole, this is bearish. So I would go on, more looking to sell this than I would to buy this. There's a lot of resistance there. That 200 is definitely holding it. You can see that price is active from it. And these 2 dojis concern me because that's a reversal sign. That means that the bears are getting weak. So, I'd be pretty cautious. I usually don't trade on Monday, and every time I say that, I end up taking trades on a Monday. But this, to me, looks like this is like a reversal sign. The bears are getting weak, and we could see a blue day come Monday. We can see an up day come up, or Sunday night in the next Asia session. And, this, you get 2 days with dojis. You got to be concerned about that. That's a pretty big pullback on that Friday candle at the close. It's an Aussie CAD. You would expect this to be bearish. The CAD is, like I said in the beginning in the commentary area, that, the CAD is just taking a lashing. And it will continue to take lashing. This is a bearish chart. This is pretty easy to figure out. And then you end up 2 days on a doji. So this up move is not going to last very long, and I would expect the Aussie to start to take control here. We come into the last week of the quarter next week, and so, the first is at the end of the week, and just take that into consideration that, the big guys, the hedge funders and stuff like that, are taking a look at what's going on, and they're going to be getting out of their position, squaring up, taking profits, and all that stuff. So I would really be watching how you move forward going into next week. Like I said, it's the end of the quarter, and you just be careful, you know. But this pair is definitely bearish, absolutely bearish. I wouldn't want to be buying the CAD. Nothing, nothing tells me I want to be buying the CAD. Here's Aussie yen. You know, again, just bearish. You know, not much to say here except that, you know, it's come down to support here. So this is at support, and we'll just see if this is going to be able to break it. This is the first level of support, and then the EA is showing you the second level of support. But price hasn't been able to hold in this up move. And Thursday we have a doji candle here, so you know, some different maneuvers here that we're looking at, and we'll just keep an eye on that as we move through our day and our week. End of quarter alerts me a little bit. You know, I think it's, you know, I give people who can long-term trade, like keep staying in trade for 7 and 8 days, 9 days, a lot of credit. I just don't have the personality to do that myself. I am definitely an intraday trader. I don't like having positions overnight. All right, here's our Swiss yen, and of course we would expect to see this being extremely bearish. Like I said, nobody wants to be buying the Swiss, and the yen is much stronger than the Swiss franc. So we're just absolutely just, you know, you're just looking for a pullback, and we've had the pullback. You can see the Friday candle ends as a doji, so we've seen the pullback. We're just waiting for this thing to just continue to the downside. You know, we are at support, and you have to keep that in mind. But I would definitely be looking for this just to continue to the downside. If you look at this chart spatially, right? If you look at this chart as a whole, this is giving us lower lows and lower highs. Here's the Euro CAD. Pretty interesting chart. However, the CAD is weak, so this is a bullish chart, of course. We've been in a range here. We had 2 up days. You know, out of the 5 days, we've had, you know, it's been pretty, you know, 2 red days and 2 up days. So, you know, that's the euro, though. That's because, you know, the euro was, you know, Monday, Tuesday was like, you know, 1,400, and now we're down to 11. What was it, 1175, 11, something like that when we looked at it. So we should be having a euro chart come up here pretty soon. So yeah, so you know, this is definitely a bullish pair here. Don't want to be buying the CAD, folks, especially with oil. You're going to need them to straighten themselves out. Here's a New Zealand yen. You know, nobody wants to be buying the Kiwi, and this is not surprising to see this in the range here. And it's just not doing anything. It's just range bound. I just stay away from this. I wouldn't even go near this as far as a trading instrument. This just doesn't look healthy on the daily chart. This is a nasty range. I'd put a horizontal line on the top at resistance and up support, and just wait for this thing to make a move one way or the other. But I wouldn't be. This would definitely not be on my trading list. And finally, this is our New Zealand dollar, and again, you know, it's bearish, absolutely bearish. Again, no reason to be buying the New Zealand. Had a couple of blue days here, Thursday and Friday, but I don't think that's because of the Kiwi being strong. I think it's the dollar being weak, and I don't think the markets closed on a positive note yesterday. If I'm not mistaken, it definitely was a mixed reaction. All right, my friends, that wraps up our Friday wrap-up for the end of the month. Our last Friday wrap-up video for this month as we start a new quarter and a new month next week. Traders, remember, this is brought to you by FXCL Excellence in Trading. Please come visit us at fxclearing.com for your trading solutions. Traders, on behalf of myself and FXCL, I want to thank you for joining us for the Friday wrap-up, and hopefully we'll see you at the next Asia session for the market opening preview, which is Monday through Friday, and I get that out before the London Open. 99% of the time I record that in the Asia session. Traders, enjoy your weekend, get a nice break, relax, do a little bit of Forex homework, and kick back and re-energize for another exciting week coming up next week in the Forex markets. Traders, I wish you a great weekend. Spending time with friends, loved ones, and even the guy in the pickup truck driving by. Say hello for me. Till next time, traders, have a good one. Talk to you then. Bye-bye.